Hello, hello, hello. What is up? Welcome, welcome. We're breaking into the future. You guys know what it is. We're getting used to this. We're breaking into all things. The future is now. I got my guy here, Corey Harris. I love how we met. We met in the virtual world, Twitter Spaces. You said some amazing things and gave some great insights to some crypto regulation. But how we always start this show off is the people. The people want to know, who is Corey Harris? Who are you, bro? Tell them.
All right. Well, thanks for the introduction. I say to other people, I'm a lawyer. I'm also an investor. I'm an entrepreneur. And I'm also an expat. So a bunch of different things at the same time.
Nice. Where are you from?
I'm from Virginia, Richmond. That's where I've lived up until I was about 18 years old. Since then, I've kind of moved all around the world. So,
yeah. Nice. Did you always want to move all around the world?
To be honest, yes. I have to give, my family and parents credit for that. Basically, kind of encouraging curiosity. So in my case, it really started as a kid where I was around, how everybody's in grade school, right? So my city back then, so we're talking in the, early 90s, late 80s, Richmond was, majority African-American type of city. But I was fortunate to have friends that just so happened to live on my street from different countries. And that kind of exposed me as a young child to like, oh, there's different countries, different types of food and those kinds of things. And just over time, I naturally kind of got it. I guess the seed was planted in my mind, like, oh, okay, if something ever comes up in the future and I have an opportunity to kind of see how things are in different parts of the world, like I want to try to pursue that. So that's really the impetus for me ending up in Asia.
Mm-hmm. Yeah. And so that was Richmond was your background in. What happened when you left the parents' house?
So school wise, I've pretty much been a nerd, like super nerd. So I was in school my entire career. I just finished some other school recently, which we could get into, but I went to school at Hampton University. So HBCU, the Pirates. And then after that, so while there, I did a lot of different things where I was doing a lot. It's kind of my MO. I've always doing a million different things, but at the time I was, and I did study political science. Mm-hmm. So, but I also minored in economics, and then I also minored in Spanish. Hey. And I didn't even want to be a lawyer. Super nerd. I didn't want to be a lawyer. Actually, I wanted to be a developmental economist, which are they're the people who basically build nation states. Yeah. That's what they do. Yeah. And I wanted to do that for various reasons, but then I realized like, okay, I didn't necessarily want to be kind of a academic, purely like ivory towers type of thing. Yeah. So I decided to go like the law and business route. Mm-hmm. So after Hampton, that's what took me to Boston. My first time actually living north of the Mason-Dixon line, which is a whole different sort of experience. Yeah. So I moved from Virginia to the Northeast and spent 10 years between school and work. I spent 10 years living in Boston, and went to Boston College and did my first law degree, my JD, and my MBA at Boston College as well. And then I just worked in Boston, as a working professional, practicing lawyer. And then I also did in-house counsel work. So that was kind of that original sort of what took you out of the house. And I basically never really went back. I would go home for, summer internship type of things. But really since then, which was the year 2000, to date myself, I haven't actually full time really been at home. The other thing that took me was after I finished school there, I ended up getting an opportunity to go to Berkeley Law. So I went there as well, got another degree. So it's called an LLM, which is a master's in law. And basically continue my professional experience, which was when I graduated law school, I was basically the money guy. I always wanted to work with and around capital allocators, people forming funds, all that sort of stuff. And I originally wanted to do investment banking. But as fate would have it, so the JD MBA is a 4-year program. So during my 4th year was actually when that final semester for me was the semester when Bear Stearns went under. Mm-hmm. And interestingly enough, I was in a recruiting meeting with bankers from Goldman Sachs on the day that Bear Stearns went under. And I remember it specifically because it wasn't just me. It wasn't just me in the meeting. It was a group of people. And they had to rush out of the meeting. You know, everybody's Blackberries were going off and all that sort of stuff back then.
Yeah.
And so fast forward, once I graduated, I ended up working at a large law firm based in Boston, doing a lot of work in the area of fund formation, which is private investment funds. So, you know, people who are forming funds, that was my second introduction into the venture space. My first introduction was actually, I kind of already knew I wanted to go into that space once I got into law school.
Yeah.
And so I spent time in India and I spent time in Hong Kong and actually in Thailand for the first time, working with VCs when I was in business school who were doing investments directly in Southeast Asia. Yeah. So that was one of my first exposures. This is before I even finished school. Yeah. And so when I came out, I already kind of knew, like, I really like this whole VC thing. I like the tech aspect of it. I like the personality types it tends to attract, which it tends to be people who are very forward thinking, who are looking and trying to innovate, push the envelope, do things different, want a better way. You know, it's not really quote unquote old money, as people would say. Yeah. And it actually matches up quite interestingly enough with the crypto ecosystem as well, which we're currently kind of, you know, all living in and a part of. So that was my original sort of path to the professional life that I ended up building.
Man, you said before we got on, you did a million things. I can see it formulating. Yeah. And what would you, I guess, like, as a loaded question, like being curious, right? Being kind of a forward thinker yourself, right? You're out the house, like I'm off the porch, like I'm just gonna be a nerd and just hop into all these things and want to make money. But it seemed like you were just being curious to, lawyer, finance, form formation. What's venture? What are all these different funds and ways of allocating money? And you have a lot of educational experience, and then you got into Southeast Asia. So is that when you became an expat? You're like, I'm gonna go over there. What led you abroad with all the experience you're getting stateside?
I mean, it's really, I almost consider it as, you know, like certain people are born for certain things or they're just built a certain way. I really think it's just my personality in that I've always thought about things in a very global sense. So I mentioned when I was an undergrad, I was a minor in Spanish. And so that was actually my first time abroad. I spent time in Costa Rica studying Spanish, just getting, you know, the basics that you do kind of in college. Also spent time in Spain and different cities around that country as well. And that was really what gave me the thought of like, okay, when you start spending months and months in places, you know, you have apartments, you know, you go to the coffee shop, you buy your groceries, you start really seeing like, okay, life for people is different around the world. And like, this is something that I could do. This is something that, you know, what you might see on the news about living in certain places doesn't always match up with that reality. And so that's really what kicked off my curiosity. On the Asia side, it really goes back to, just to be totally honest, I was lucky that when I was a high school student, my high school was the only school in the state that taught Japanese to high school students. Wow. And that was because we had a international exchange program. You know how different cities in the US have like sister cities in foreign countries. And it just so happened that there was the school district where I lived had a sister city program, and the teachers brought in Japanese professors from Nagoya, Japan. So this is me at 14 years old, my entire class of us that took Japanese at 14, I'd say about 75% are somehow in Asia or they live in Japan full time to this day.
Yeah.
And so it wasn't just my year. So it was not just my year. It was a program through the school. So it lasted. It might even still be going on, but it was for a number of years. So even classes behind me, folks that were younger, there's been a cohort of people from my school, my little town, that are all living in Japan or live in Asia because we kind of got exposed to cultures at a very young age. So for me, it's always been about not really a major strategic plan, especially as an adolescent, but it's really you just follow your curiosity, and then you try to just nurture that curiosity, whether it's professional or just personal.
Yeah, nice. That's an awesome opportunity. to like at 14, right? Many people don't. They just see their
Oh, it's a
mentor.
blessing, man.
Yeah.
Total blessing. Like, I mean, I grew up from not a crazy background, but I definitely was aware and no more than 1 degree separation from some of those crazy backgrounds you hear about.
Yeah.
And so for me, I don't really know what motivated me to take a class, but it was, you're in high school, you have to pick between different languages. And I was like, well, I'm really about being different. So I was like, you know what? This is the most different thing that I've seen in
Yeah.
the school curriculum
Yeah.
in my life, Japanese. Like, I have no idea. Let me take that just to see what it's about. And that's really how it started for me.
Yeah.
Just be different.
That's awesome. And so how fluent are you fluent in Japanese?
I'm not fluent. I'm professional level. I would say
Yeah.
proficient, professional. It
Yeah.
ebbs and flows mainly because day to day I do business in English.
Mm.
And Japanese is similar to other languages where if you don't use it constantly, your skills will diminish. But in my case, I've been around it for so long
Yeah.
that, we can't travel right now, but if I get back around it sort of 24/7, within a week, I will have picked up to a baseline level of Japanese. So like even right now, if I were to get off a plane, I'm going to know how to, navigate the subway, get to
Yeah.
my hotel,
Be
order
good.
my food.
Yeah.
Yeah, like anything you need for day-to-day life. But as a practicing lawyer in fluent legal Japanese, no, I mean, that's even local people born there have to go to school to get that additional set of skills. So,
Like
but
just
yeah,
like
it's just
yeah,
yeah,
that makes sense. Dang. So you're in Thailand now.
that's right.
How many cities have you been in abroad? And has that mostly been Southeast Asia?
Actually, no. The funny thing is, I spent basically the first half of my life only in Latin America. So, um, Nicaragua, Brazil, Costa Rica. When I was in the different firms I've worked in over the years, I was on different business teams. So I do speak Spanish still fluently, like
Nice.
professional level. So I was on a lot of
Mhm.
Spanish related deal teams,
Yeah.
that sort of thing.
Nice.
And then, so basically what happened was I was into Japanese in high school. When I went to Hampton in college, they didn't offer it. So I took Spanish, but I didn't forget the Japanese. It's just like, okay, well, just adapt to the circumstance. So
Mhm.
then that basically led me on a 15-year odyssey of just doing a lot of things in Latin America as far as working, making connections, etc. And
Yeah.
then once I finished law school and got back in the professional world, these other opportunities came, and I was like, oh, well, remember I was doing VC work in Southeast Asia. So I'm like, it's a good thing I still remember this Japanese here. Let's
Mhm.
see what's going on. And
Yeah.
so I just basically, a lot of times where people go to school and they just take a class to pass a test,
Yeah.
my philosophy, even as a kid, was always like, no, I want to remember everything I'm taking because who knows how it's going to be useful.
Yeah.
And so I've just basically added on to different skill sets over my entire life.
What gave you
So
the foresight to think about that though? Like, was it just you? Like, I think 10 years down the road, or as a adolescent, you were thinking that way, or was like, did you have people in your life who were like, you never know, little
that's a
Corey,
good,
this is gonna
well,
help
no, I
you.
think
You just,
that's a good question. I don't think, okay, there was no grand plan. You can't be 12 years old, 13 to have some grand plan for your life like that. I don't think.
one in a
In
million,
my,
billion. Yeah.
yeah, in my case, I've always tried to just stay true to my own curiosity.
Yeah.
That's it.
Going back to that.
And I always put more value on real knowledge and understanding versus just having an A in the class.
Yeah.
So one of the things that I tell, sometimes I might mentor young people, and whether they're going to med school or trying to go to law school, they're usually really like type A, hyper focused on getting straight A's and all that sort of stuff. And
Yeah.
what I tell people is that the one thing I love about languages and culture is that an A on the test means nothing if you can't navigate a real life situation.
Vibe with the people, man. If you're not out there in the streets
Exactly.
with it, it doesn't matter. Yeah, it doesn't matter.
It's
Yeah.
the application. So the theory and the practice. You
Yeah.
have to actually be able to apply your knowledge in real time on your feet. Now that has served me, for folks who are paying attention, that serves you across all of life. But my first real understanding of that probably came from the foreign language side, which is that you need to take what's in a textbook and you need to be able to quickly apply it to a fact pattern in your actual life.
Yeah.
And you need to have the ability to recall that information under stress or under some sort of pressure.
Yeah.
Right? Because you're trying to figure something out, usually when you need a word or you need to be able to say something. But that same skill set applies in the legal space. It applies across many different areas and avenues. But I say for me, it was always like, I don't really care as much on my grade on some Spanish test or Japanese test. I need to make sure that when I'm in that place, if I ever meet those people, that I can actually communicate with them and that they can understand what I'm saying.
Yeah.
And that was always more important for me, especially on the language side. Now you need the grades too, of course, but on the language side, it's like, okay, if I can't talk to you and I don't remember that word, it doesn't matter if I got an A on that test or whatever I was doing back, when I was younger.
Yeah. Yeah. So the foundation of you were like, stay curious, let's remember it, let's apply it, let's understand it, and led you to law, to different business, being the money man, right? Getting into venture capital, which is just new businesses for people that, for the viewers, that can scale and be large. And you did that in Southeast Asia, you did that in Latin America, right? Your curiosity led you around the world. So in these new venture capital funds that give investment to these new companies, where does crypto come along? And when did crypto come along?
Well, see, the first VC fund I was ever involved with was on the corporate side. So as a law student, I was working in a large insurance company. And what gave me the flavor, the first introduction to VC is that if you're an insurance company, they've got to match their assets and their liabilities because they've got to make these payouts over long periods of time.
Yeah.
And so what insurance companies do is they are looking at how do we generate returns? And they do that through equity, fixed income, cash, and then alternative investments. And alternative investments takes you into a couple of different buckets, which takes you into, hedge fund and venture capital and private equity. Private equity just being a later stage life cycle effectively of venture capital because it's all still private capital.
Yeah.
And so from there, what took me into the sort of VC space is really in the US. So I started there working with a lot of the large, older, established VCs who've been around since the 70s and 80s, and doing that as a young lawyer and as a junior lawyer and kind of working my way up the ranks. And if I were to look at the key thing about VC, I guess, from then to now is actually it's still the same. VC, if you boil it down, it's really all about basically what's hot and what the trend is. So what do I mean by that? So I can take a step back and sort of synthesize it as a lawyer. So if you were to, when I was practicing in the 2008, 2009, 2010, the general consensus was, okay, VC's dead. We're in the great financial crisis. What was going on was pensions were losing money because they lost a lot of money in the downturn in the stock market. And in order to raise cash, what they ended up having to do was sell their illiquid stakes at pennies on the dollar to actually raise cash to fund their current liabilities.
Yeah. And
so people thought from the VC side, oh, it's dead because basically sentiment was effectively as bearish as it could ever be.
Yeah.
But if you look at those vintages, I tell people this all the time. I remember talking to older partners saying, oh, VC's not coming back or this or that. If you look at the vintage of venture capital funds that were raised in 2009, 10, and 11, a lot of the companies that you're talking about now that are all public companies and they're high flying, their first investments were all during those years.
The bearish times, the blood on the
exactly.
street, the Ubers.
That was because blood was on the street. Valuations were low.
Yeah.
Sentiment was low. That because valuations and sentiment were low, it meant that you could get in a larger portion on the cap table at a lower capital outlay. And so it also meant that there were fewer folks running around chasing those new startups because they were still licking their wounds from the great financial crisis.
Yeah.
So that was kind of how it progressed. And then over the years, if you look at where VC has gone from then to now, well, and interesting to tie it to crypto, because I've been steeped in this space as well. I started in crypto as an attorney in 2015. I was generally aware of crypto 2009, 10, but back then I was dealing with student loans, just life.
Yeah.
But in what I would say is that the tide of VC to crypto, a lot of people don't realize is that you have the Bitcoin white paper everyone knows that was released in 2008, and then Bitcoin launched in 2009. And then you have shortly after, you have the Ethereum project, their white paper, and then their token. Those early projects actually, especially on the Ethereum side, they approached venture capital. Venture capital turned them down. The reason that we had the ICO boom in 2017 was because
Bitcoin approach venture capital.
Not Bitcoin. That was, of course, anonymously created by Satoshi, who nobody knows who he is. But on the Ethereum side, those projects were actively approaching people on Sand Hill Road, which everyone knows. Sand Hill Road is the road in Palo Alto where all the venture capitalists used to still have their headquarters.
Yeah,
they all turned down crypto projects in 2017, and that can be fact checked by everyone. And the reason that they turned it down was effectively it didn't look like anything else that had previously existed.
Yeah, it was.
Yes, you had a bunch of
new.
It was so new that there was nobody that a VC could call and say, "Hey, have you heard of this? Can you vouch for these guys?"
Yeah.
And so that lack of capital is what actually created the necessity for the ICO. It was the necessity that led to the innovation of like, hey, VC's not going to pay us any attention.
Yeah.
Let's go ahead and figure out how to create our own tokens and fund ourselves with our own community.
Our own liquidity. Yep.
Yeah. Exactly. Now, I've written about this. I can probably send you a link to it. I'll put it up on my site as well. But I was writing stuff about this back in 2017, which was now the froth and the issues that went on and some of the bad actors.
Yeah.
That doesn't go away. But the key piece is that what I think the important moment in 2017 was that for the first time, your average person on the street who is not a quote unquote accredited investor,
they were then
had the opportunity to participate in the upside of capital formation in the same way that Google or Facebook had their VC investors and they got 10,000x returns. Yeah. And I think that is what really opened up people's imaginations, and that's what actually caught Silicon Valley's attention. That was what caught Sand Hill Road's attention when, for example, Ethereum is well over $1 billion size ICO, and there are tons of other projects. Not to just single them out, there were tons of other projects, some of which fizzled out, some of which became much larger and still around and working, but they all raised their rounds around that 2017 time. Yeah. And some use VC capital and some use token sales. Yeah. And that showed the industry that, hey, we need to pay attention to these people because they may not even need us in the future if the trend were to continue.
And it's continuing.
It is. I don't think it's gonna that time period is a snapshot, and it probably will never come back because regulators just won't allow that to happen. But it was I put a tweet out earlier about this. It was a proof of concept that you could really go direct to your community to raise capital, and you don't need a lot of middlemen involved in that process.
Yeah. So I think that was awesome because, like you said, proof of concept, right? Product market fit, right? Like if Joshua and Corey, two intelligent guys say, hey, we have like a few thousand people in our network, 10,000, whatever. Hey, we want to start this XYZ project. We want to have a token sell. We could literally raise $50 million in a matter of a week or a month, right? I run a startup. It's taken us how many years to like get a real seed fund by accredited investors, which I'm thankful it took that long for, just learning, growing, actually finding product market fit for something that could be massive and impactful. But right, like you said, there was a lot of gatekeepers in Sand Hill Road in Silicon Valley, or just to access to capital. And I think it's a bigger issue.
Yeah, to me, that's the core issue about. So when I think about cryptocurrencies, and I use the words digital assets as opposed to cryptocurrencies, but for the purposes of folks listening to this, I think of them interchangeably, even though I prefer digital assets. When you use that term, what I'm thinking about, if you boil it all down, why is it that let's say millennials and Gen Z, Gen X have been so enamored by this? Yeah. My personal opinion is that this is the first time that the average person can really have the hope of some sort of an outsized return or gain. Yeah. And when you look at now, of course, as an attorney, I understand the history of the 33 Act, the 34 Act, the charlatans and the things that were going on in that period of time that created the need for regulation. But the downside, or the inverse of those rules, is that while the consumer is protected from the risk of loss, they are also, which goes unstated, never allowed to have the gains. Mm-hmm. And the reason that this crypto push, I think, has been so fervent since 2009 is the confluence of events that we've had post Great Financial Crisis. Mm-hmm. And the day-to-day lives of your average person around the world has just gotten more difficult. And crypto really is an avenue for hope, that not hope in a lottery sense ticket, but hope in the sense that innovators can connect directly with like-minded members of a community. Those like-minded members of a community can, if they so choose, participate in that upside in a way that is basically unfiltered. Mm-hmm. Because if you're a project and you have a token and that's the only avenue to your cap table, so to speak, other than, traditionally, even though VC is involved, that's giving the public much more upside volatility than you would have seen before. And what I analogize it to, when people ask me, what's the difference between venture capital and the crypto markets, and what is all this volatility in token price? I really do consider it, real-time mark-to-market pricing of a protocol, in the same way that you would price a portfolio. But portfolios don't use mark-to-market accounting. And so that's how you can have a VC investment that goes on for 10, 15 years, and then they do an IPO with a pop. But on a day-to-day given basis, there's no market pricing mechanism for how well a protocol is doing. In the crypto space, you can see that directly based on sentiment in the market. And so I think that's where a lot of that volatility comes from, that people get put off by, regulators get scared of. But what I always tell people is that if you don't have any volatility, you will not have any return. Mm-hmm. So when people complain about the volatility of crypto as an industry, what they're leaving out, though, is that volatility is the price of your returns. If you want steady, stable 1% and 2% returns per year, stick with the Treasury market and the bond market. Mm-hmm. Why is everyone leaving those markets? Because it doesn't even keep up with inflation. And so it's a duplicitous argument to say, on the one hand, we need to tamp down on the volatility. Mm-hmm. Or even an institutional investor, when an institutional investor says, I love the asset class, but it's too volatile. Well, if they're trying to balance their short-term and long-term liabilities, they're going to need that upside volatility in order to meet their obligations in the future, which is the very reason why they allocate to venture, private equity, and hedge in general anyways, because that volatility gives you the ability to make those outsized returns.
Yeah. Ooh.
I am passionate about this. So let me not, I'm very, very passionate.
For you, and this is for the people. This is for you to let a load off, for us to have an awesome conversation. And I think your background, I think every, young adult, every seasoned veteran in life, and I mean, even kids should be listening to this for so many reasons. But I think you said it so pure. It's it's risk to return to every asset you have, or everything in life. There's a risk, but there's also a reward, right? That's investing. Scale it out to time, how you use your 24 hours in a day. There's a risk, right? And a reward to that. And then we take it down to money, since you're the money guy and I'm money school. There's a risk for you holding that dollar versus you holding Bitcoin, versus you holding Ethereum, versus you holding some physical gold. There's a risk, but there's also a return. So you have to think about, hey, there's risk. What is the risk in return for me holding this dollar versus me holding Bitcoin? And how long does that look like? So I think that was an awesome breakdown. So how do you for, I guess, obviously, you know, now for people that don't know, cryptocurrency, right, or digital assets, I guess just the cryptocurrencies, right, the tokens and the currencies as an asset class is a little over $2 trillion or at $2 trillion. It fluctuates currently. Bitcoin being about 42% of that 2 million. And it's obviously like the FOMC, basically the Federal Reserve's meeting minutes. They spoke about cryptocurrencies for the first time, right? We've had, me and you met on a Twitter Spaces where a lot of cryptocurrency big shots were talking about, we need to save, we can't let these people in Congress do the infrastructure bill that really was basically saying, hey, we're making a lot of these miners and fees basically say, hey, a lot of these things are custodial, right? They are market makers. And so basically we're getting a lot of regulatory attention, like to everything financial, everything that is a business has a law that has to confine to, whether it's local or national. So to your expertise with finance and the legal world, time to put on your teacher hat again, like give us the breakdown. For a lot of us, it's very hard to understand like what is really going on in the weeds and like in Capitol Hill, even international law. You're all over, you're in Bangkok. Like what is really going on as you've been in this space for over half a decade? Like what's really going on to date and how does that impact us going into the next year and into this decade as a whole?
Well, that's a great question. I guess I'll try to break it down into a couple of different parts just so that, you know, the audience can kind of think through. And I'll harken back to one key point of my background is that I said when I was an undergrad, I was political science and economics. So I actually did work on the legislative side. So I do understand how legislation works. I've done work representing different types of clients, pushing legislation, getting it passed at the state level and at the national level. Policy, that sort of thing. I've been involved with that in the private investment space. So I think what's going on now is that, let's take the US first. When you look at the United States, crypto was really never viewed as anything that was a serious concern up until, let's say, the last 12 months or so. Once the price, for better or worse, even though, you know, the price of a project doesn't actually represent the real value, but people pay attention to that. It's a human nature. And what I think is going on, and the reason why I even spoke up on the Twitter Spaces and ever got involved, because I've been commenting privately to different folks in the space for years. But for me, the issue was my understanding of both government policy, politics, and law is what I think people need to be prepared for is that September 13th and September 20th, I put this on Twitter a few weeks ago, are the dates people need to watch. And why do I say that? September 13th, I believe, is the date that the Senate officially comes back into session, even though they can work. So this is at the congressional level. They can work even though it's a holiday. So like right now, there is technically vacation time, but that doesn't mean they're all on vacation. Usually they go back to their districts and they're dealing with things there. But because of things in the media that are going on, not related to crypto, you know, they may all still be in Capitol Hill. But what I expect is that there's a staffer, so a human being at different regulatory agencies that have been given an assignment over the summer. And that assignment has been to draft language and legislation related to crypto. And then they've been given those assignments by regulatory agencies such as CFTC, SEC, as well as senator offices such as Senator Warren, other senators, not calling her out specifically. But their job is to basically draft the rules and the policies and the strategy. And then what they're going to do is they're going to hand that to the senators. The senators are going to take their game plan. They're going to talk to other key senators in horse trade, and they're going to nominate someone to put forth legislation. And that's what we saw with this infrastructure bill, that the people putting forth the legislation were really just straw men. And you use that concept where in many different areas where somebody is making a purchase for somebody else, right? It's the same concept. And so I think we're going to see that, and we're going to see it for a few reasons. One has really nothing directly to do with crypto. I think one thing that people often forget is that each administrative agency at the federal government level, they have their own budgets and they have their own jurisdictions and purview. So the Treasury Department has its own set of people, leaders, prerogatives, etc. The Securities and Exchange Commission, the CFTC, et cetera, et cetera. Mm-hmm. So some of what we see going on is a brand new technology and set of innovations that different agencies in government are trying to make sure they carve out their authority to regulate over the specific parts. Mm-hmm. And why is that? Well, in the US, the law is basically written by analogy. It's like a case law, right? Yeah. Case law comes from English law. Yeah. Case law is English law. English law is law by analogy. So you make a legal precedent based on a case or a ruling, and that draws analogy to prior cases and prior rulings. Mm-hmm. The issue with what you see with Bitcoin is, and I wrote an article in 2017 about this, the nature of our legal system is that it's designed to take something and say, this thing is like this other thing, and therefore we're going to treat it in that way. Yeah. And what you're trying to do, what the regulatory agencies are trying to do with crypto and why they're struggling, and what they're going to really push forward, I think, in this coming fall, is putting the structures in place to take this new thing that people can't quite fully categorized by all these agencies. Yeah. And they want to put it in nice, neat little boxes to say who can regulate and administrate what. Yeah. And the reason that is a risk is that their individual goals to do that may cause collective harm to the digital asset ecosystem. Mm-hmm. Now, Treasury is concerned about things they should be concerned about: AML, KYC, not financing terrorism.
What is AML all and KYC for the break-in game?
Okay, yeah. So anti-money laundering and know your customer rules. Mm-hmm. Treasury Department and FinCEN, which is the financial, they cover financial crimes and those sorts of things. Their goal, which is the right thing to do, is to make sure that funds aren't being flowed to illegal organizations or bad people. And with this new technology, the issue is the rules aren't really set up to properly cover that. Yeah. And so if you're a regulatory agency, your first inclination is to basically grab for power and authority and figure out the details later. If you're the industry, the technology industry, just like when the internet was first introduced in the 90s, you're saying, wait, if you overregulate us, you might kill a lot of innovation. Yeah. So we're playing out that same story again. And you see that in jurisdiction after jurisdiction. If you take that main area as it relates to the cryptocurrency space, I think we're going to see in September a major push to classify most of the tokens that might be listed on a Coinbase as securities and get them removed. And I think we're also going to see the Bitcoin and Ethereum, they can't be really regulated. And the reason they can be regulated, let's restate that, but they won't be banned. And the reason is just a very simple, realpolitik reason. Wall Street has too much money involved with Bitcoin and Ethereum right now.
Yeah. Wells Fargo just
it's done. Out. It's done.
JP Morgan,
too much.
They've been involved. All the big, if you know a bank, they probably have a small allocation, or if you know an investment fund, everybody out there, they probably have a small portion of their money. BlackRock might be like 0.1% of their $9 trillion plus balance sheet, but they have some money in Bitcoin.
So that's the good news. The good news is Bitcoin, Ethereum, I think crypto in general is not going to go away because it's basic. The baby has grown too big to sort of kill in the cradle at this point. That's really what if this had been 2015, 16, 17, they could have done it, but it's out of the bottle now. The genie's out of the bottle. Yeah. I think what the issue though, we're probably going to face is that if you remember when we started this conversation, I talked about the beauty of crypto showing that a project or a protocol could go direct to the consumer and that community could fund that project.
Oh no, don't do it.
Regulators are going to step right back in there and it's not going to go away. You're going to have the same rules and requirements that you have raising a VC fund or what's called a Reg A fund, where if you're trying to raise, let's say 30 to 50 million, that's not a bad thing. Yeah. My point is not that that's bad, but my point is that those are costs on entrepreneurship.
Yeah.
And it operates as a tax, because if you as an entrepreneur now need $75,000 to cover legal expenses, to cover compliance expenses,
You're dead.
Maybe you don't even start your idea, or maybe you take that idea and you go to a jurisdiction that will let you start it up for much less. That's, to me, is the core risk.
You move up. Yeah. You just
That's the core risk. And in the other areas of the world, governments are looking at things in different ways, but I'd say they're all generally in the same sphere. I look at them in spheres. So the North American sphere, and then the European sphere governed by the EU.
Yeah.
And then in Asia, there's a mix of effectively China as its own thing. And then Southeast Asia is really, countries look to what Singapore is doing. Yeah. And then Japan and Korea do their own thing as well, kind of in concert with the US. So I think what I see is that every jurisdiction is trying to figure out the best way to wrap their heads around the innovation. But I think what we're going to see the rest of this year and going in the coming years is a divergence between jurisdictions. And that has to do with local issues like foreign currency strength, capital accounts, like macroeconomic issues, I think are going to drive how some countries treat cryptocurrencies and digital assets. Like if you're in a country with a weak currency, you just have different day-to-day concerns than if you are, let's say, Singapore, which is basically like Switzerland in Asia, where they're trying to attract global capital all the time. And if you look, all the cryptocurrency exchanges that have set up Asian operations, the majority of them are in Singapore.
Yeah.
And that's the reason why, is that they are the Switzerland of Asia. They are the money center. They want to be open for business, but they don't have the same issues that, Vietnam would have, or, Malaysia would have, that sort of thing.
Yeah, that's interesting. So September 13th, September 20th are the next dates that anyone interested or have invested interest in crypto need to be looking for. What do you think that you said the outcome is? Like a lot of cryptos will be regulated, or the space will be more regulated, and cryptos will have
what I'm worried about is, so the Twitter spaces I got involved in, how we ended up meeting is what I'm actually worried about. So in that Twitter spaces, that this discussion was the infrastructure bill. And so the issue was, well, what is this infrastructure bill and what does this mean for crypto? Yeah. And the infrastructure bill actually did two different things. One thing that it did was define broadly the term of what is a broker. And by defining it so broadly, it risks catching as a dragnet developers, software teams, people like a Coinbase, a Kraken. The regulation was drafted so broadly that interpretation of what is a broker could be something that turns out to be onerous. Now, Congress and the various representatives that put the bill forward and the senators said that's not our intent. And my point in the spaces was that your intent doesn't actually matter, because if the Treasury Department decides that they want to take a tact for some other reason, there could be many reasons that we're not aware of and we wouldn't be aware of. It could be preserving leeway to head off future innovation. It could be the banks, which are a strong lobby and have connection with the Fed. And it could be a million different reasons why the Treasury could take the position that we want to create an overly broad definition to not allow a Vitalik or a Gavin Wood to innovate in the future in a way that we can't control before it happens. Yeah. We don't know the answer to that. The other thing that the rules did, the infrastructure bill did, that not a lot of people paid attention to, was that you'll recall at the end of 2020, when Treasury Secretary Mnuchin was leaving, he had tried to put forth a bill, I believe it was in December, maybe December 15th, 2020, that was going to require suspicious activity reports to be filed for any transaction. I believe it was above $5,000. And that provision is a version of that has found its way back in this infrastructure bill as well. So, okay, Corey, why does that matter? Well, the discussions that happened the last few weeks on Twitter and online with the crypto community to get the amendments through, those amendments didn't actually happen. They never got called to vote for a reason dealing with Senate procedure.
Yeah.
And that if they had been called to vote, it was possible that other things would have fallen apart, not related to crypto. And so there was no vote. But what does that mean? So what's the summary of what this means? It means that the infrastructure bill, as originally drafted, is what's going to be put forth in September.
Yeah.
It means the overly broad language with no change. Now, what does that mean? Well, I think it remains to be seen. I think what's going to happen is there'll be another version of a fight. Whether or not any amendments are made actually don't have anything directly to do with crypto, because remember, the infrastructure bill is a budget bill for the federal government. So there's a million moving parts in that bill. Crypto is the pay for. So the reason that crypto got into that bill was that the 28 billion to be raised via taxing the industry, which is, mind you, a budgetary projection, that 28 billion came from the CBO, which is the Congressional Budget Office. Yeah. What they do is they basically run a scenario analysis in Excel and say that given the size of an industry, we think we're going to raise this much tax. That allowed Congress to offset the spending that was going to happen. So crypto effectively just became the whipping boy because it was the least strong lobbyist in Washington. And so the risk that the crypto industry faces is that if the bill passes with no modification, no amendment, we'll be okay up until probably a year from now, the end of 2022, when the bill fully comes into effect.
Yeah.
And if it were to fully come into effect as drafted, it's going to mean that if you're an exchange, if you're Coinbase, you're Kraken, they're going to start having higher compliance costs first. Yeah. But then they're also going to have to start basically reporting on customers in a way that might stifle innovation. That's the risk.
Yeah. You'll just be like the old system, right? Like you'll just be like the NASDAQ. There's no difference, right?
If I put on my political science hat, if I'm a bank, I want this. And why do I want this? Well, cryptocurrency is effectively the fintech space. It's a fintech. Mm-hmm. Fintech operates because it didn't exist 100 years ago. Fintech has lower levels of compliance costs. Mm-hmm. They have lower levels of headcount. Mm-hmm. They have higher levels of profitability. By imposing these rules that are actually more stricter than what the banks face, you are now increasing compliance costs, which could be considered a tax on your EBITDA, right?
Strategy.
It will slow the industry down.
Yeah.
Bottom line, it slows the industry down and it allows the banks to catch up. Now, that's not to sound conspiratorial. I'm looking at the outcome, not the rhetoric. Like, what is the actual outcome going to be if you're a CFO and you're a CEO and you have another 200 pages of regulations to comply with? Well, you've got to now hire many more people and you've got to now slow down your innovation.
Yeah.
You have to slow down your innovation now. Before you want to launch a product, you now have to run it by 30, 40 people, additional lawyers, which is a reason why. I mean, there's a reason why no US exchange has issued a token. So if you think about the Binance token, if you think about FTX tokens, they're not available in the United States. The reason for that is related to the securities laws, the compliance,
I can't use
and those risks.
FTX. Yeah.
Nope. That's why.
Yeah.
It's compliance. So I'm not anti-compliance, but I like to point out that there's two sides to each coin.
Yeah.
And the debate is always about how do you properly balance that? Nobody wants to have the 1920s where people get swindled out of everything, but you also don't want to kill the next job creation engine in the United States.
Yeah, because then we'll in terms of competition, our superpower or the future, right? We'll lose people and we'll lose opportunity. So
I mean, that's a risk. It's a real risk. I think it'll be an interesting. I don't think this is over. I think it's going to be a 5-year, 6-year sort of a process.
Yeah.
Yeah, but I think it will definitely be something for us all to watch. Now, said all that, I'm still bullish Ethereum. I'm bullish Bitcoin. I'm bullish the space in general, because the fact that it was inevitable that you cannot have the type of success that the digital asset ecosystem wants to have and not have regulatory and broader political issues come up. It's not possible. Like you can't, there's a price, right? There's a price of success in any area of life. You can't have that level of, exactly. So that's, this is just par for the course is kind of how I look at it.
Yeah. It wouldn't be talked about. We wouldn't have those type of talks on Twitter if it wasn't a thing. Right. And so
exactly.
Right. We wouldn't be talking about it now for an hour. So I think that's the beauty in the battle of like the future of innovation and America, like hopefully getting out of its own way, right? Just because we were the growth engine for the world. And that's a whole nother discussion of why and how. It doesn't mean we will for the future, because like you said, there are other countries that are hungry, right? That are second tier or third tier, like El Salvador, like, and they're trying to come up, right? Africa, Southeast Asia, with this play to earn, which is a whole another thing that we won't have enough time for today. But I know it's late in Bangkok. But yeah,
that's why I say I think we're going to see a real divergence. So there's a lot of folks have spoken on versions of this, but my personal opinion is that the U.S. today is the equivalent of what Europe, let's say Western Europe, was in the 1700s, right? People that left Western Europe to move to America were looking for the new world. But if you were already wealthy, you didn't leave.
Yeah.
You don't have anywhere to, you don't need to go anywhere.
You're comfortable.
So I think that
you got your
exactly.
Dollar. King dollar, still king. You're good. You're six figures. You're financially free. Whatever you are on the wealth scale, you're good.
It's, if you look at history to synthesize it, you go from Western Europe. So you go from the UK, France, Germany area, you migrate where? You migrate further west to America, to the New World.
Yeah.
The people in the New World, again, I mentioned, having spent a lot of time in Boston and the Northeast, which is old money, right?
Super.
Those people didn't move to California during the gold rush. They stayed on the East Coast. That's why the big banks are all on the East Coast.
Yeah.
And that's why the tech companies all were founded on the West Coast. People have constantly moved throughout history.
It's human nature.
To greener pastures. Exactly.
Always.
And I think the issue,
we're always searching for that. Wow. That's a philosophy.
We are. And what we're going to run into over the coming decade, and everybody can look back and timestamp this in 10 years, hopefully we're all here, which is going to be that there's different countries that have different histories are going to take different approaches to cryptocurrencies. So for example, if I'm El Salvador, or I'm Colombia or Nicaragua, or I'm Nigeria, all right, they've been a member of the IMF and the World Bank and the current world system since World War II. That system has existed since 1945, all post-World War II economic order, right?
Yeah.
So if I'm any of those nation states and I'm looking at crypto, I'm going to look at the last 50 to 60 years of my country and say, what has this current order and this current system done for me? What has it done for my people? What has it done for my nation state? What has it done for my currency? This is why I think at its core, it doesn't matter how you might think it's going to play out. I think you're going to see differing approaches because nation states have not had this kind of an opportunity to chart their own unique paths since World War II.
Yeah. So that's like what decentralization is. It's saying these different states, these different countries, in people, these different ecosystems that are being built are formed. Like we're having that new shuffle again, like kind of to make the new path for people to make the plays, whether it's on a national level or individual level. It's time to migrate to the new system. Where do you think?
I'm a big student of history. And so if you look at anyone that's watching can Google this, there's the Treaty of Westphalia is that treaty was in the late 1600s. I don't want to quote the date wrong, but you can Google to confirm that date. That treaty created the modern nation state that we think of.
Yeah.
So if you were to Google a map of the world in 1500, and then you Google a map of the world in 1900, you see the Ottoman Empire. The Ottoman Empire covered everything from the Baltics to what we now consider the Middle East to parts of North Africa. And you look at after World War II, so 1945, that whole map of the world looked different.
Yeah.
And it's just that, we all think in our own, we're all kind of stuck in our own heads.
Paradigm, yeah. Our
The
30
world is constantly
changing.
Constantly changing. And so I think we're just going back to a period of time where that's uncomfortable for people, but we're going to see a lot of those sorts of changes. But I think it's an immense opportunity as long as we have the mental disposition and stay nimble to those opportunities and to that change.
Yeah. Wow. We can go another hour, but where do you, I know there's a digital revolution where we're already on these digital spaces like Zoom, Instagram, we're on Facebook, where, we buy things through Amazon, we watch things through Netflix, we search through Google, right? We went from yellow pages. I keep talking about this. We went from yellow pages, right? Everything was indexed to catalog. Then the catalog got put on the internet, which anyone could search for that had internet service. The internet got better bandwidth, so you can reach further places. More people have it. About almost a third to half the world has internet, and we're looking for the next 1 billion to 2 billion people to get online. And then the metaverse, which now people are talking about it now, great. But like you said, it's always evolving, right? The metaverse is a fully interactive, engaging experience where me and you can actually hang out. We're literally 12 hours apart, but we could literally not just, text, DM each other, but we could say, hey, let's go to these coordinates and live in this world, right? Let's walk around and run together, whatever we want to do, that's still a ways away in terms of infrastructure being built out, right? So that's Web3. In terms of I'm saying, prefacing that to say break into the future, we're about to break in and get your thoughts. We have this digital full real ecosystem, and ecosystems plural, that are being built to do that. But then, like you said, the map will change. So I want to ask, this is the question, where are people going to move in are people going to move in the physical world, but they might stay where they're at, not literally move physically, potentially, and or also just say, hey, I'm going to move into these digital worlds as well and create my new space there. What do you think about that? I know it's a big question, but I wanted to kind of frame it for everybody.
Yeah, I think that's interesting. So I think it is going to be in different subgroups. So for me, I've been a full expat since 2017. And I've been everywhere outside of the US since then, moved around quite a bit, traveled to different countries. But that's not the lifestyle for everyone, right? Yeah. So some people, but I do think if you look at the knowledge worker economy, if you're a knowledge worker anywhere on earth, and if they meet certain income thresholds and skill set thresholds, I think they're going to increasingly be mobile if they want to be, but just remote hired from wherever they are.
Yeah, like me.
And so I think I think we're going to see an increasing, the rate of change of people moving, whether physically or remote working, remote locating, is only going to increase at a faster pace, but only for people in the digital economy. So I think that's going to be the divide. If you are a construction worker or you are a longshoreman, you physically can't work remote. You have to go to a dock. You have to deal with ships. You have to go to lumber yards. You have to build homes. But if you're a knowledge worker, any sort of developer, software person, tech, anything that touches the internet, you can do that work from increasingly anywhere on earth. Yeah. Now, I don't think we're going to see major moves for a couple of reasons. One, people are still people. They're still going to want to have kids, want to settle down, want to live near family, that sort of thing. Yeah. But I do think a larger percentage of the population than in the past may say, you know what? I saw this breaking into the future interview. Maybe I should look at going some other place that I haven't been before. They may think, oh, maybe I'm open to it at least for a few years. I think we're increasingly going to see that where people might decide.
Yeah.
People I know personally who, they're born and raised in Canada, owned real estate, sold the properties, moved to the Azores, which is off the coast of Portugal.
Yeah.
Bought a house cash, living in retirement, but working part-time, So I think we'll see hybrids of all that in the future. And I think for the good thing is, like, when you and I were kids, especially when I was a kid, so I don't want to date you, but when I was a kid, you couldn't get on the internet. You couldn't get on the internet the way you can now. So I'm probably the last generation pre-internet, which I remember the internet at around like 8 years old, 7 or 8 years old. You could get Prodigy and AOL and that kind of thing.
Yeah.
But before that, I was still too young. But nowadays, it doesn't matter where you live on Earth. If you want to learn anything, you can basically hop on YouTube or other online sites, and you can skill up
instantly.
That would allow you to go anywhere.
Yeah.
And I think that opportunity, if people take advantage of it, it could drastically change the makeup of nation states. If you look at the crypto space specifically, you look at what's going on in the US, you look at Wyoming, you look at Texas, you look at Miami. Internationally, you look at Singapore, you look at what Malta is doing, you look at Portugal, what they're doing. Yeah. So you are seeing nation states saying, hey, we might lack in certain areas, but we can create policies to attract these new minds and this new type of capital to our nation state, and we can make it super friendly for you to come here. Yeah. And a certain percentage of people are going to say, hey, the grass is really green on the other side. Like, they're going to give me tax breaks. They're going to let me do different things. And people will get up on a plane and move if the incentives are high enough. Yeah. So I think it's an incredibly exciting time if we're open to it.
Yeah, definitely. Man, so basically you're telling me to come to hang out with you in Bangkok.
Yeah, right now it's maybe a little tricky, but I think there's a lot of jurisdictions, I spend time not just here. I think there's a lot of jurisdictions where when things calm down a little bit, it'll be a lot of interesting opportunities for folks. And I think you're going to see countries have to innovate like this because their own budgets are hurting from what's going on right now. Yeah. So they're going to create policies that are business friendly. Like you hear it in the States all the time, business friendly jurisdictions, business friendly laws. So nation states are going to start saying, hey, well, if crypto's on the internet, if people all around the world hold it, why don't we create policies to attract some of that capital from all around the world, like El Salvador is doing, or like other places?
Yeah. You already hear it in crypto space. People are like, I might just move to El Salvador. I might go out there and check it out. So I agree. We're really early in that time, right? And like, it's a nation state, so it takes time to develop these things. You can't just move so fast and break things. You can't break a nation like that. This isn't a tech company. So I understand that, but definitely, like, I don't think you lived in Africa, but like, that's a big focus for me. And me and my brother's tech company, our whole team is in Africa, and our CTO's in Africa.
Oh, wow. That's a whole nother conversation. Yeah, we could talk about. So I think there's a lot of opportunities in Africa. I think it's really the last jurisdiction that hasn't really been developed. And of course, there's so many different countries and cultures and rules. But I do think there's a lot of great opportunity there. Of course, there's a lot of great human capital. Yeah. Incredibly smart people all over the continent. Yeah. Incredibly well educated. So I think, there's definitely going to be a Africa rising story. I think more people will hear about as the years go on.
It's happening for sure. Yeah, man, this is awesome. Where can people follow you, keep in touch? I know this is like your coming out party into the public eye.
Yeah. I'm not really in public a lot. So I guess the easiest way to follow me for now, you can check out my website is my name. So Corey, Corey, Harris.com. Yeah. And then the place I'm most active daily is Twitter, which is my name again, Corey Harris _ESQ. That's for Esquire. So you can catch me on Twitter there. My Twitter handle has my website as well. That's the easiest place for folks to reach out, follow me, that sort of thing. And anything I have going on, folks will be able to see it there.
Nice. One takeaway I know I learned, and a lot of people will learn a lot from this not lecture session, but fireside chat. What do you want someone to take away from this? From like just things that you've like that's on your mind right now, and then like since this is breaking to the future, like something future that's on your mind.
Well, the two key things I think, you know, wherever you are in your life, when you hear this, you can always make the changes needed to put yourself on the road to the path that you want to be on. Doesn't matter what you're doing right now, listening to this, where you work, if you want to break into the industry, you can do that if you just really change your thoughts and put yourself in a position and around people. I think in the crypto space, what I'm looking forward to and what I think we're going to see in the next 12 to 18 months, I think we're going to see the S curve of adoption of crypto continue to exponentially grow.
Yeah.
I'm expecting any day now, or any day within the next couple of months, that everybody's major US banks are going to offer crypto services just on, your grandma will be able to get it on her checking account.
Yeah.
I'm expecting that at any time. And I think that that's going to really continue to usher in a mainstream understanding of crypto. And as that happens, the whole ecosystem benefits. And the final thing I'm waiting on, which I don't know when it's going to come, but I'm waiting on our iPhone moment. It's probably a few years away. But what do I mean by that? I mean is a UX and UI interface for the ecosystem that is so easy that your grandmother, your aunt, your grandfather, people who don't know anything about tech can just pick it up and use it. And when that happens, it's really going to be a mass market phenomenon.
Yeah, definitely. I think like that's one of the big challenges and that we're working on industries. Like it's super complex to use. It's better than 2017. But another more iteration, we already have great talent in the space, but just like more iterations, right? More better UI UX, which is just design and just understanding users better. Stop making things so nerdy.
It's, to be honest, it's all built by engineers, right? So we need to get non-engineers. We need to get like UX UI. We need to get marketing people with the qualitative skills. How do things feel? We need to get some more of those people.
We need more Steve Jobs.
Engineers.
We need more Steve Jobs.
Yeah.
Because
it'll happen.
Yeah. So cool, man. This is awesome, man. Man, looking forward to part 2, man. Big bro. This is awesome.
Yeah.
Thanks for your time. I appreciate it.
Appreciate it. My pleasure.
Thanks, man. Yo, we just had an amazing conversation. I hope you guys picked that. That was a masterclass on life. Curiosity. You heard his future takes as well. Stay curious if you're young, if you're old. Doesn't matter your age. Stay curious. Continue to learn. How does that apply to your life? Can you apply it? Not just read it about it, not just get a good grade. If you're in school, use your schooling, the theory, so you can put it in practice. Corey Harris, a businessman, just happens to be a lawyer, been in venture capital, a lot of different investment vehicles. So I'll leave his information below. This is Breaking to the Future. Joshua Taylor, you know what it is. Breaking Gang. I love you guys.